All right, today we're playing detective. We're on a case that affects millions of people all over the world. The case of the unaffordable home. Seriously, how did buying a house go from being this core part of life to something that feels totally out of reach for so many of us?
So yeah, that's the big question, right? Why is it so hard to buy a home now? I mean, for a huge chunk of the 20th century, the formula was pretty simple. You know the drill. Work hard, save your money, buy a house. But that formula, it's just broken now. So let's follow the clues and see if we can figure out what went so wrong.
Okay, so first things first, in any investigation, we have to survey the scene. Just how bad is it out there? Is this just a big city problem or something more? Well, all the evidence we've gathered points to one conclusion. This is a full-blown global crisis that's completely changed the game. And this right here, this just lays it all out. Think about it. Not too long ago, a typical home cost about 3 times what a typical family earned in a year. 3 years' pay, that was the dream. Now, just look at the reality today. We're talking 10, 20, sometimes even 30 years' pay. The goalposts haven't just moved. They're on a different planet.
So when experts look at this, they use a really simple tool called the median multiple. It's just the price of a typical home divided by a typical yearly income. And for a market to be considered affordable, that number should be around 3. That was the gold standard for decades. Remember that number, 3, because it's the benchmark we've completely lost sight of.
So how are we doing today compared to that standard? Well, get ready for this because this is a truly shocking finding from a major global report. They looked at 95 major cities around the world and, for the first time in 21 years, not a single one was considered affordable. Not one. This isn't just a New York or London problem anymore. This is everywhere.
And to see just how bad it's gotten, let's look at the city at the very top of the list, Hong Kong. Its median multiple is a jaw-dropping 14.4. Just let that sink in. That means for a normal family to buy a normal home, they'd have to save every single penny of their income, no food, no bills, nothing, for more than 14 years. It's so off the charts that the researchers literally had to invent a new category for it, impossibly unaffordable.
And believe me, Hong Kong is not alone in this. This impossibly unaffordable club has members all over the world. You've got Sydney, right on its heels at 13.8. Vancouver has been in the top 4 for almost 20 years straight. Then you have places you'd expect, like San Jose and LA, and even a massive hub like Greater London is way up there at 9x. It's a pattern.
All right, so the evidence is overwhelming. The dream is, for now, gone. So the investigation moves to the next logical question. Who or what is responsible? We've narrowed it down to 3 main suspects. Now, what's really key here is that these 3 things didn't happen in a vacuum. They're all connected. It's like a chain reaction. It starts with how we think about houses, then it moves to how we limit the land they're built on, and it ends with this flood of cheap money that just poured gasoline on the whole fire. Let's look at each one.
Suspect number 1 is a massive change in mindset. 30 years ago, a house was a house. It was shelter, a place to live. Today, it's a global investment strategy. It's become just another asset like stocks or gold for huge corporations and investors to park their cash in. And when all that money rushes in, it just shoves regular families right out of the market. Okay, suspect number 2. We basically stopped building enough places to live. And the weird part is, a lot of this started with good intentions, Things like zoning limits, height caps, rules meant to preserve a neighborhood's character. But when you add it all up, it created this nightmare of red tape that made it incredibly hard and expensive to build anything new. So you have a ton of money chasing way too few homes. And this brings us to our third and final suspect. And honestly, this chart just says it all. For the longest time, when wages went up, house prices went up kind of alongside them. It made sense. But look at what's happened in the last 20 years. Wages have barely budged, maybe a 10% bump. Home prices? They've exploded by 200%. The math just doesn't work anymore. Paychecks haven't kept up with price tags.
So there you have it, our 3 culprits. Housing treated like a stock, not enough new homes being built, and wages falling way behind. But what's the collateral damage? What does this actually do to society? Let's trace the ripple effects.
And the consequences? They're huge. We're seeing families delay having kids because they're stuck in a tiny apartment. The average person buying their first home is now a decade older than their parents were. People are turning down better job offers because they can't afford to move to that city. And maybe the biggest thing, it's splitting society in 2.
You have the people who own property, and then you have everyone else who are at risk of becoming permanent renters. It's creating this huge divide.
And just to give you a sense of the scale we're talking about, check out this number. The total value of all the real estate in the world is now worth 3.5 times the entire world's yearly economic output. Think about that. That's a mountain of wealth that wasn't created by inventing something new or building a business. It was created just by owning an asset that became scarce.
Okay, so things are pretty dire. But the good news is governments are starting to realize they have to do something. The situation is getting to a boiling point. So what are some of the counterattacks being tried around the globe to crack this case?
And when you look around the world, you see a bunch of different approaches. There's no one-size-fits-all solution. In New Zealand, they're going right after the supply problem, basically forcing cities to plan for more growth. Singapore is famous for its massive public housing program. Then you have places like Wales and Taiwan that are trying to curb speculation with big taxes on second homes. And in the US, there are even talks about banning big investment funds from buying up single-family homes altogether.
So, we've looked at the evidence, we've lined up the suspects, and we've seen the counterattacks. It's time to deliver the final verdict in our investigation. And it leads us to a much, much bigger question.
Because when you connect all the dots, you realize this case isn't just about housing. That's just a symptom. The real story is about this massive tidal wave of money that's been sloshing around the global economy. It needed a safe place to go, and it found one in property. An asset that we, through our own policies, made artificially scarce. And the result? A huge transfer of wealth from people who work for a living to people who just own things.
And that brings us to the final, and maybe the most uncomfortable question of all. We've seen all these different fixes countries are trying. Tweaking supply here, adding a tax there, but are those just band-aids on a much deeper wound? Is it possible that to really solve the case of the unaffordable home, we can't just change housing policy? We might have to change the whole economic system that created the problem in the first place.